May 2nd, 2025. I'm making a video a little bit early today. It was, one of those relatively obvious lower trading range, upper trading range days. I don't know what's going to happen in the last 12 bars of the day. I expect nothing all that crazy. It is the end of the week, and as I mentioned yesterday, the bulls are trying to get a close above moving average, so I will be interested to see how strong this closes. It's important if the market closes up here today versus if it closes somewhere down here. It's going to make a really big difference on the weekly chart. We're closing above the moving average right now, but the moving average is about 5,700. So if we close at 5690 versus 5725, it's going to be a big difference. So I am actually really interested to see if we get a close somewhere up here today. So the day opened around the prior day's high. You can see we tested it by one tick. We got a 3-bar micro channel, 3, 4, and 5, but really not all that good. We have huge tails on 3. We have huge tails on 5. And, it's only 3 bars. So you're hoping, I've been noticing in my study a lot, at least, that micro channels of 4 or 5 bars tend to do a lot better in general than 3 or 4 bars. I don't have the exact statistics yet, but I'm getting there. But not really that great to be selling 5. If you were looking at the 15-minute Globex chart, I'll pull that up. Hold on. It looked like this. So coming into the day, this was what we saw. This happened just before market open. The market was opening at 9:30, so obviously this was the opening bar. So coming into the day, we had four really strong bull bars and a 5 bull bars. It's a 5-bar micro channel. Sorry, I'm a little tired. We had a 5-bar micro channel coming into the day. So odds were this was going to get at least some sort of second leg. You can see we might have gotten it recently, the symmetrical second leg. So we're basically closing. We're probably going to close today somewhere around that symmetrical second leg price, which is not surprising. So I did not think 3, 4, and 5 was all that great. I thought the context on the 15-minute chart was more likely to make us go higher. So I decided not to take this. I also try not to trade before bar 7. 6, 7, and 8. There is something interesting about bar 8. We kept an open gap with the bar 6 high and the bar 8 low. Now, micro gaps are obviously important, but I thought it was particularly interesting because 6 and 7, 5, 6, 7 doesn't look all that great. But the fact that 8 was so strong and the low held and did not overlap the 6 low, thought that made bar 8 a little bit more appealing. However, I was still not quite willing to buy bar 8. I didn't quite give it a high enough grade, and we had 3, 4, 5, which was pretty strong to the down. And so I thought 6, 7, 8 probably needed a little bit more. Now, what are the odds that a 3-bar micro channel in general, any of them, right? What are the odds it gets immediate follow through? Immediate follow through being a bar in the same direction after. Well, what are the odds of immediate follow through? Well, we got it here, and we did not get it here, or here. So if you go through all the examples, the number that I'm coming up with currently is about 35%. 35 to 40 is probably somewhere in the range of where it's going to be once I'm done with all my examples. But if something is a 35 to 40% probability and not something happens, then it's a bit of a surprise. And look at the surprise, right? Look at bar 9. Bar 9 is a really, really strong close. So for me, I wasn't quite willing to buy bar 8. I thought it was okay enough, but I just wasn't quite willing to buy it. But then I get bar 9, a really good follow-through bar. And I know follow-through, immediate follow-through like this doesn't happen all that frequently. And when it does happen, I know a lot of times it doesn't look quite as good, right? Something like 46, a large tail on the bottom, that's not as good of immediate follow-through. So of that 35% of the time, already unlikely, how often is the immediate follow-through borderline perfect? I wouldn't say perfect. You would want to see a bar like 12 for it to be perfect, but it's a really good follow-through bar. How often does that happen? Well, probably not all that often. I don't have the exact statistic, but that's something I'm going to dive deeper into on, dicing up immediate follow-through. I have to divide all of that stuff up essentially. And when it's low probability that we even get immediate follow through, the immediate follow through looks really good. I think odds are that we're probably going to get a symmetrical second leg. And obviously, the traders who, if anyone listening to this still trades the 4-bar micro channel, 6, 7, 8, 9, I think it's a really good system. You buy the close, you hold through the complex pullback, you get your second leg. So what I did, I didn't really want to buy the close of 9. I'm trying to get in around the initial entry price. So what I did was I set a limit order to buy the bar 8 close. There's nothing wrong with buying the bar 8 close. It's completely fine for it to take. But for me in this context, I wanted to wait for a follow through bar. So I got filled on bar 11 and I went for the symmetrical second leg, which I thought was higher probability because of bar 9. and it came within 2 ticks. I always put my limit order. I think it came within 3 ticks actually. I always put my limit order 2 ticks away. 4.20. Okay, no, it came within 2 ticks. So regardless, I basically exited at the high tick of 12. I don't know if it was the exact high tick. I just hit flatten at the market when it was at 2 ticks away. I was on the SPY, so it was a little bit different, but it was the same. Basically, in this tail, I exited at the symmetrical second leg price and got my scalp. 13, 14, 15, good 3 consecutive bear bars, but a large tail, and 15 goes above 14, so 2 legs down. But a tight enough channel that it might get some sort of second leg. 17 and 18, good bull bars. You know that 11 and 12 are pretty decent bars, so we should get at least 1 tick above the bar 12 high. I just basically read this as 1 leg down, pull back, 2 legs down, pull back, 3rd leg down. 26, 27, or sorry, 25, 26, pretty good. 26 is an outside, or 25 is an outside bar, so it might pull back a little bit before going higher. But both of these bars close on their highs. They look pretty good to me. 27, a doji bar, and then more follow through, bar 28. An outside bar 29, but 25, 26, 27, 28 is four consecutive bars without going below another bar, meaning it should get some sort of second leg up. 30 and 31 are good bars for the bulls. However, for me, if I'm looking at, if we're looking at the 15-minute chart, we have a spike, a pullback, a channel, a couple legs in the channel. I think we're in either, I would call it leg 4, but we're in leg 3 or leg 4 here, and we're breaking out above. So we're in a late leg breaking out above a bull channel. So, the probability of breaking out above a bull channel and that breakout being successful is in general about 25%. So it's really not all that good. So for me, I thought it was a little bit more likely that we went sideways here. I wasn't going to be as easily convinced. 34, 35, 36, 3-bar micro channel, but I'm not willing to sell. We've been above the moving average all day. The bears are going to need to do more for me to want to sell. So let me just pull up the upper half of the trading range. Also, when we broke out above this, if it's going to be a trading range day, which odds are it's a trading range day simply because most days are trading range days, it's very likely that we're going to retest back to this bar 30 high because we created an open gap with the 30 high and the 33 low. So when we get this gap, you have to be thinking, if this is a trading range day, and most days are, odds are we test back to this area. And if it's not a trading range day, how often do we get 3-bar micro channels against the bulls in these days that are not trading range days? You should look into it. So I did not take this one, 39, 40, 41. I'm not selling that either. To me, it's just forming a triangle. I'm going to wait for a breakout. So I got a breakout on 44 and 45. For me, 44 and 45 is a breakout below the bar 33 low. You can see we get below it on 44, and 45 closes below it as well. What's the issue with this trade? Well, my glaring issue is that we only have one close below the moving average so far. In selling here, you're selling the first close below the moving average in a while. And additionally, 45 isn't that strong of a close. If I want to be aggressively selling closes, I want it to look something like this. 27, 28, 29. See how 28 closed below the moving average, and then 29 was another excellent close below the moving average versus over here. So if, close below the moving average and then not really that good. So if you're going to be selling closes below the moving average or the first test of the moving average, you want to see the market perform borderline perfectly at that price. So here it's really not on 44 and 45. So what did I do? This was my only other trade of the day, but I thought that while I wanted to short because I thought it would get a second leg, I did know we were in leg 2 and we were probably on around support, the bar 12 high. The bar 30 high. I did think we would get here, which we did on 46, which is good immediate follow through for the bears. But for me, I still thought odds were we get a second leg. So instead of looking to, there's the way I've described in the video I have in the members area. I know I mentioned it a lot, but that particular video, when I talk about the way that I trade, where, I have a trade the close and then 5 scale-ins or 4 scale-ins plus a trade the close. So 5 total entries. What I do is, just manipulate it in a way that if I don't want to trade the close, so I wanted to avoid my sell the close trade, I would just trade my sell the close position size and add it to the position size or add it to whatever scaling I wanted to add it to. So instead of trading the close and the initial pullback, I believe 25% was somewhere in here. Instead of selling here and here, what I did was I just saw the 43 low. I thought odds were we closed the gap between the 43 low and the 45 high, and I just sold the 43 low instead. It's still the same trade. I'm still trading for the symmetrical second leg. It's just using a logical resistance area instead of slightly more arbitrary scalings. So 43 high. Also, it's an outside bar. 43 is an outside bar, which means it's a trading range bar, which means odds are it get tested. So the 43 high to the 45 close, and then symmetrical second leg goes from the 47 high to around the 48 low, and I got out in this area. And the reason I got out in the area is the same reason I'm always exiting. The symmetrical second leg is hit. So that was why I exited down there. It's also 3 legs down, 1, pullback, 2, pullback, 3. And then we get a reversal up, 48, pullback, 50, 51, pullback on 52. So I think we're in leg 3 here. You could argue pause 54. So you could argue leg 4 on bar 57, which is why I did not take it. I think that if you're buying up here, you have to be very careful because, well, you might get the symmetrical second leg, and you did in this case. A lot of times in leg 3 and leg 4, the market's going to fail, and it's just not quite high enough probability for traders to take the trade. 63, 64, really good bear bar is going to get some sort of second leg down. And 65 is an interesting bar. It closes stronger than a lot of traders who are looking to sell for the second leg. So a lot of traders see 63 and 64, and they want to sell and get a second leg down. As far as 65 goes, you can kind of relate it to this sort of trade, 52. I talked about it yesterday. The context is different, but you can relate the type of setup that I'm talking about. In that it's, consecutive bear bars and then a bull bar closing near the moving average. And so what most bears will do, it closes stronger than a lot of them like, but most bears, they'll just sell the close and then get their second leg down below bar 65. What bulls will do potentially is if you're going to take this buy, I've talked about this kind of stuff before. If you're going to take this buy, you have to use a wide stop. Using maybe a measure move down, buying above 65 and just putting a stop below it doesn't make a whole lot of sense. The odds are we're going to go below it most of the time. If you don't believe me, go test it. Go see how often we go below it. But anyways, you could buy above 65 with a wide stop. And I mentioned yesterday I didn't love the trade on 51, but if you're going to take that kind of trade, those swing trades, it makes more sense to use a stop that's a measured move down in a lot of those situations. And you have to buy more below 65. And people want to trade larger on their lower probability trades, which seems to make sense for a lot of people who are new, but I don't really. The longer you trade, the less sense that makes, because what you want to do is buy. If you're going to buy here, you want to buy small and add your position on here. And if you buy here and it goes in your direction, then you're probably starting a big swing. So you should be adding higher when there's a higher probability. So you either want to add when to increase your probability with a wide stop, and that's when you can increase your size, or you can add when it goes higher, when the probability gets higher. But either way, you should think low probability, low position size, high probability, higher position size. As far as the daily chart goes, I think this is a swing trade. The April 30th bar, disappointing follow through on May 1st, and then obviously big bull surprise on May 2nd. So we have a breakout on May 2nd. We're probably going to have to get to this April 2nd high at some point. And if we get here, we're getting here. So I think this high is probably the target. Again, I think we get here first and maybe we stall a little bit, but this area, 58.37, 58.50 roughly, is probably going to be where we get to and start to go sideways. I would imagine we'll have a trading range within this range for a little bit, but we'll obviously have to see how we approach that area. The weekly chart is looking good. Again, the market hasn't closed yet. It doesn't close for 30 minutes. And at the end of the week, 30 minutes is a long time. But so far, this is what the bulls want to see. Again, the further above the moving average it gets, the better it is for the bulls. It's closing above the moving average, which is about what the bulls can ask for right now. But if it gets let's say magically, not magically, but let's say it's unlikely, but let's say there's an 100-point rally at the end of the day and we close somewhere up here, that's obviously way better for the bulls. And the monthly chart, disappointment, you can see we're probably going to have to go above that high. All right, that is going to be it for this video.